Welcome to this week, and what a week it has been. It's fantastic to be back into the This Week studio. I guess, well, it's the same studio, but we'll call it this studio. We, of course, had a couple of the last two live streams have been non-this week ones. We had, of course, that promised I'm going to get a little bit on the drinking side stream. And in addition to that, we had yesterday's 1,000, no, it wasn't 1,000 subs. Yesterday was the 1 year Q&A stream. So that was pretty darn cool. We all had a pretty good time there. Welcome, of course. We've got Jill in the house so far, as well as Mr. Red Taco. So it's always good to see everybody in here. So we got a whole bunch of different stuff here today. One thing I'm going to mention right here at the beginning of the stream, when you first log in, if you see this little thing above you in your chat over there on YouTube that talks about gifting subs, be sure to click on that and toggle that on, because what that means is if somebody with deep pockets come in here and decides they want to gift a whole bunch of subs to people, if you haven't turned that on, you can't be one of the people who gets one of them free subs. So that's always a good thing to have on. It's kind of, in a way, it's kind of like the way they do it over on Twitch. And it's like Yahoo, I was going to say Yahoo Finance. It's YouTube getting sort of caught up into that Twitch market. So definitely do that just in case. You never know. And hello, Hockey Nut. It is good to see you. You must be very happy because hockey season, I think, is just on the verge, or it just began. I think I heard something about games in Prague, so that will be interesting. All right, so we got a lot of different things to talk about today. I want to start with subscriptions, and the subscriptions we're talking about are, well, people who are subscribing to things like Netflix, Disney Plus, all of your streaming services. So they did a survey last week in the US, and what they discovered is that more than 50% of Americans said they would rather cut their food budget or even their clothes budget, but they don't want to cut their streaming services budget. So that's kind of interesting. And I think in a way it's kind of taken over for television. So in a lot of different houses. Now, here's the other interesting thing. The average amount that an American spends on their subscription services, $135 a month. Holy banana bread. That's a lot. Now, mind you, that number is going to be a little bit higher than it probably should be, because how many Americans do you think probably have, I like to call them vampire subscriptions, those little subscriptions where you go in for the free trial, you try it out, and you're like, yeah, it's not for me, and you just never get around to canceling it. And then it's continually billing you on your card and you don't notice it. A lot of people will have those. And sometimes they're just small ones. Like I've seen people who've had like little $3.95 because they clicked on something on their phone. And it's now sending them a horoscope every day, and they don't realize they're paying $3.95 or whatever a month. So it never hurts to always be checking your card. And if you see one of these reoccurring things like that, find out what it is, because if it's something you're not using, you can cancel it and be completely free of that payment, which is fantastic. And I can't watch the Jays anymore. No, I heard about that last night. The poor Toronto Blue Jays are gone. And everything looked so promising with them going into the wild card. I don't think anybody predicted them going out. I think it was 2-0, like 2 games in a row. So that's kind of interesting. I spend $20, and that's not too bad. And that's about what we spend. Yeah. We've got a lot of subscription services here. Disney Plus, Netflix, Crave, Amazon Prime, even though technically that subscription is all about the free shipping, but I mean, it's giving you access to Prime as well. So yeah, there's definitely a little bit of stuff that is here. I never get rid of streaming music. It's worth the $10. Yeah, absolutely. I mean, I remember in the old days when you used to actually buy individual songs off of iTunes. Now you can just get a subscription service. And if you were like me and you were actually spending more than $10 a month on different songs, well, why would you bother when you can now get either, Apple Music or Spotify or something like that, where you get access to pretty much as much music as you want and create your playlists and you're all good. Much better than downloading them all, of course, and trying to keep them up to date and trying to organize them. Yeah, yikes. That is definitely true. I still have a CD book in front of my stereo. It's funny. I can't recall the last time I've actually seen a CD. Now, I've recently seen some DVDs, and I even thought that those were like kind of out of place. So it's weird how fast things change and how fast we forget about the old days, or at least the old ways of doing things, because we're not doing it that way anymore. So that's kind of interesting. All right, another little story I have for you guys today. We're going to talk a little bit about the CRA, so Canada Revenue Agency. So the CRA, back in, what was it, 2016, there was this report that got leaked. It was called I was going to call it Pandora, but it was called the Panama Report. Now, what this report was basically, it was a list of a lot of really rich people who had offshore accounts, and they were harboring Canadian money that they weren't paying taxes on. And that's one of the things that when this report came out, and it wasn't just Canadians, this was a worldwide report. The Panama paper pointed out different people, mostly rich and famous people, who were sheltering all of this money from different countries. Now, a lot of countries have gone after them and have gotten a good amount of that money back. All Canada has done so far, all of our CRAs, we've identified about $75 million of unpaid taxes out of this report so far. And we're only about, I'd say, 2/3 of the way through the amount that's in there. So this is money that we need to get back. But here's the thing. All these other countries have been moving quickly on this, and they're getting their money back. By Canada dragging our feet, we're giving some of the rich and famous folks in that list, and I'm not going to say who's on the list, but some of those folks on that list are given extra time to basically say, let's hide the money a little bit better. So I have a feeling this is one of these things that you want to act quicker than taking your time, as the CRA likes to do. I mean, a lot of the bureaucracy in Canada has always been very slow. So it's just one of those things. But that's interesting. Now, the next topic I did want to talk about as well is I want to talk about crime. So you guys all know crime. A report had been released this week, and they came up with the top 38 most dangerous places to live in Canada. We're talking the most amount of crime. So I've got the top 10, and then I've got some notable cities here. Now, here's a question I asked you guys in chat. What do you think is the number one city for crime in Canada? Where do you think most dangerous place to live? Which city would be the worst place to open up anything, because you're probably going to get robbed? Let's see. Slow unless everyone else owes them money. They take your money while it's still in your pocket. Yeah, true enough. They're slow to pay you. They're slow to process. But if it's you and they want your money, they are quick on the ball for that. But yet, for some reason, they're not quick on the ball with these I really want to call them Pandora papers, but the Panama papers. Per capita, I would assume that that's how they ranked these, Jill. Yes. All right. Oh, we got some guesses in here. Winnipeg, or that's winter. Winnipeg is in the top 10. Winnipeg is definitely in the top 10. I'm going to guess a smaller town like Sudbury. Sudbury is actually in the top 10 as well. So both Sudbury and Winnipeg are in the top 10. Edmonton did not make the top 10, Jill, amazingly enough. All right, I'll give you guys number 10. We'll work from 10 up as you guys can keep guessing, and we'll see if somebody does guess it. So number 10, the 10 most crime per capita in the country is Brampton, Ontario. So Brampton, Ontario comes in at number 10. Now, number 9 is a city I don't like. I lived there for 30 minutes. 30 minutes. Well, 30 days. I was actually there for about 30 days in total. Hamilton, Ontario. So Hamilton, Ontario in at number 9. Number 8. Toronto does not make the top 10, Jill. Number 8 is Oshawa, Ontario. Red Deer. You're getting closer, Mr. Red Taco. Red Deer is in the top 10. All right, number 7. And this is one that somebody had guessed earlier. Somebody had guessed Winnipeg, and Winnipeg is number 7 for the worst place to live per capita with crime. Number 6, Sault Ste. Marie, and that's also Ontario. Number 5, this was another one that had been guessed, was Sudbury, Ontario. Number 4, believe it or not, there's no more Ontario in the top 10. Number 4 is Kelowna, BC. So Kelowna, and Kelowna is a little bit of a retirement town. I would never have guessed that they had a high crime rate there. Now, number 3, and this was Mr. Red Taco's guess, was Red Deer, Alberta. All right, number 2. Number 2 is a place, it's interesting because it's a part of Vancouver, in my opinion, but they're looking at it as being a separate thing. Not Kamloops, Mr. Red Taco. It's Surrey. Surrey, BC came in at number 2. All right, that number 1 spot. One of the most windiest cities in Canada, and apparently a lot of crime there too, and it's Lethbridge, Alberta. So they came in at number 1. Now, I did just write down as well here a couple of the more popular cities, just to throw these at you guys. So coming in at number 13 was Regina. So Regina came in at 13. The first Maritimer one on the list was actually Moncton. They came in at 16. St. John's, Newfoundland came in at 17. Now, somebody had guessed Edmonton. Edmonton actually came in at 19. And I also saw a guess for Toronto. Toronto came in at 24 on the list, believe it or not. Halifax, right behind Toronto at 25. Now, Vancouver proper came in at 26, which is amazing considering Surrey was so high up on the list. Calgary came in at 28. So Calgary looks to be a pretty safe place. At number 31 was Montreal, of all places. And I live in Ottawa, and Ottawa came in at 35. So that's kind of cool. So it's really interesting. Sometimes you think, like, I know when I lived in Toronto, it never really felt that dangerous, to be honest. I mean, there's so many people that there's going to be crime. But when you actually think about what are the odds of an individual running into crime, it wasn't that high. So it kind of starts to make a little sense. And I was actually really surprised that Halifax was that far down, because Halifax is being a port city, and a lot of times port cities have a little bit of extra crime all to do with it. So that was a little crime thing. I thought that was kind of fun that we would just sort of hit up on the crime. Anyway, that was kind of neat. A little bit about layoffs. So one of the things that we are looking for towards moving towards a recession, recessions, of course, do come with layoffs. So we should be seeing more layoffs if we're heading towards a recession. Well, GE spoke up this week, and they have decided that, so General Electric have decided they are going to lay off 20% of their entire workforce. Holy banana bread, that's like a lot. And here's this other interesting thing. And Mr. Red Taco says, I'm surprised places like Grand Prairie or Fort McMurray wasn't there. Yeah, I know. I would agree. Now, they may have been somewhere in between the 10 and because I only wrote down some of the bigger cities. They may have been there. I don't want to say that they weren't in the top 38. So, because there is numbers that are missing. So there was a survey that was done this week as well with U.S. CEOs, and they asked them, are you planning to lay people off in the next 6 months? And the CEOs, more than 50% of them actually came back and said, yes, we are planning to lay people off within the next 6 months. So that's interesting. And here's the other interesting thing that came out of the surveys, that a lot of them said, when we start to lay people off, we're going to start with the work at home people first, because they're kind of annoying, and we don't want to have our workforce at home. So that's kind of how they're going to work around that. I don't think everybody's going to do that, but the fact that some people are thinking that, it's like, I would almost be heading into a recession if I was work at home. I would want to make sure I was very stable at home. Otherwise, I would be almost thinking about going back into the office if it was a job that you really cared about and you were worried about the layoffs impending. Um, but that's kind of interesting that is kind of the way they're looking at it. Now, an interesting thing that came out as well, a guy by the name of Larry Summers. Now, Larry Summers is a former Treasury Secretary of the US. And one of the things he was saying in an interview is that for the US to get inflation under control, they kind of need that recession to come in and knock the unemployment rate down to 6%. And right now, currently, the US is sitting at, I believe it's 3.7%, because we did have some job stuff come out this week as well. And the job market is still stronger than they would like. It's almost like they're going to need that recession to really knock the jobs out. But that's an interesting thing because it's not, normally, even though that's an American statistic, it's kind of a similar situation in Canada. And our job market is even stronger. I think I would say it's stronger than the US. So speaking of our job market, Alberta has this new campaign going on. And this campaign, it is called Alberta is Calling campaign. So they actually, they're looking for skilled workers, Alberta is. And they have commercials out there where it's like, a nurse, a carpenter, and a technician walked into a bar. Or no, what happens when a nurse, a technician, and a a nurse, a technician, and a carpenter walks into a bar. They all get jobs is apparently the answer. So it's kind of a weird thing they have, and I really botched that joke. I should only tell jokes that I'm not going to botch. So what they're doing is Alberta wants to really start looking beyond energy, because right now they have a strong foothold on the energy sector, and that's all cool and dandy. But they want to actually start building up their renewable sector. So they want to do a lot of different things, from solar farms to wind farms. And they want to get a lot more people in place to do that. Now, here's the funny thing, though. I don't even know if Alberta needs to do that, because a lot of professionals have already started leaving places like Ontario and have been moving in that direction anyway. It's kind of like, the best comparison is if you think about the drain from California to Texas. There's a lot of workers have been leaving California to go to Texas because of better taxes. Well, mostly it's better taxes, better pay. They get to keep a lot more of their money. That's kind of happening in Canada, but between Ontario, I guess in this case, Ontario is California, and Alberta would be your Texas. So kind of an interesting little thing from there. Mr. Red Taco says, you work from home and now you can stay home permanently. Yeah, that's kind of a scary thing. It's one of those things I mean, as long as if you're doing a really good job at home, I think there's a potential that you can get much more productivity out of somebody working at home. But you can also get people, there are some type of people that really shouldn't be working from home because they're not going to be focused on their job. They're going to be focused on everything but. So there is that. It sort of goes both ways. So it's kind of interesting. Now, there is a little thing going on the House of Commons. So the House of Commons they have approved an inquiry. So they voted unanimously. I think it was the Department of Agriculture voted unanimously for a inquiry into the record profits that the three big grocers are making. We're talking Loblaws, Sobeys, and Metro. So Loblaws, their profits this year increased by 21%, while inflation is going crazy and people can't afford food. Sobeys, even worse, their profits increased by 27%, while Metro's increased by 15%. So they want to look into this. Now, what the grocers are trying to say, and this is their excuse. Now, listen to this excuse. This is the lamest thing I've ever heard. They're like, the reason we have record profits is because we've been opening up from the pandemic and people have been starting to buy makeup and cosmetics and, just general things they need to go out in public. So that's the reason they have record profits. It's because people are buying makeup. Seriously? I don't buy that. It almost sounds like it sounds like one of these cockamamie excuses. It's like, seriously, if you're going to come up with a lie to protect the fact that you're gouging people, at least make something that sounds plausible. This just did not. When I read it, I was just like, holy banana bread. What are they trying to do? It's like they're not even trying. It's like, it's like, did you have your hands in the cookie jar? No, I had my hands on the outside of the cookie jar because I was warming the cookies up from the outside with my hands. Like, seriously, of course you were in the cookie jar. So it's kind of that thing. I know. In the pharmacy part, apparently. That's what they're saying. It's all from the pharmacy and all of the, the toiletries and things people need, deodorant, makeup, all of that fun stuff. And that's brutal. Yeah, absolutely. It's very brutal. I mean, if anything, there's no reason for them to be. I would almost say keep your normal level of profits, and anything you increase on, maybe cut your food a little bit. Give people a break. But I mean, Jill said profits are good for investors. Yeah, absolutely. And if I was invested in one of the grocery stores, I would probably be like, oh, okay, well, I like the extra. I like the fact that my money is safe. But keep in mind, I don't think these stores are actually passing any of that on to their investors per se. I think it's all going internal. Like, I have not heard of like Sobeys pumping up dividends or anything of that nature. So that's kind of one of them interesting things to take a look at to see how that's all going to come out in the wash. And yeah, exactly. So good for some, but bad for everyone else. And they even save money on the autonomous delivery drivers. Yes, yes. And Loblaws is looking at doing that. Now they're only going to be doing pretty short, easy routes for now, but you're going to have the delivery trucks with no people in it. So that's going to be interesting. They're actually out there. They're going to be on the road. So those people who say, oh, you're never going to see driverless vehicles in my lifetime, well, you're wrong. They're already happening. So that is kind of interesting. I mean, discretionary spending has been steady on, so that's not completely wrong. Yeah. No, I mean, absolutely. It's probably not. They probably do have an uptick in that category. I know myself, I mean, during the pandemic, well, before I started YouTube, I mean, I didn't use any makeup when I was just sitting at home doing nothing. And I imagine a lot of people were the same way. So yeah, there's going to be some uptick there. There is probably a grain of truth, but I can't see a 27% increase in profits all coming from the cosmetics counter. I just can't see that happening. So that's kind of that thing. I wish I got into Loblaws when it was cheap. Yeah, yeah, absolutely. So I mean, but even still, most of these things are available as fractional on Wealthsimple anyway. So you can still get into something when it's expensive, but it's nice to get in when it's cheap and when there's a big pump ahead of it, for sure. All right, that takes us to oil. So this week, oil was the big news. OPEC is basically they've come out, and I'm sure you've all heard this. They're they're decreasing their overall production by 2 million barrels. Now, and that's a day. So 2 million barrels a day. What that actually equates to about 2% of the overall world oil output. So we're looking at that coming down because they want to drive. This is interesting. OPEC's words were, we want to get oil back up to about $90 a barrel. Well, congratulations, OPEC. You succeeded. I know I looked earlier today and oil was sitting at $93.20 a barrel. Now, a lot of experts were saying, yeah, that move by OPEC is going to drive, oil back up to $100 a barrel. I would kind of agree. I think that's where we're definitely heading. So it's kind of interesting in that sense. I mean, between Russia cutting off oil supplies, between OPEC sort of trying to throttle the oil supplies, we're looking at an overall increase in the price of oil. So this is that time of year where right now, if you use oil to heat your home and you've got the money to get that tank filled, fill it now. Fill it before these prices start going back up. Pay attention to what's going on because gas is going back up. It has already happened. I don't know which province it was. It was either Nova Scotia or New Brunswick. They used the interrupter clause a couple of days ago, and they knocked up the price of diesel, I think, by about 10 cents a liter. So it is going back up. So this is one of those things where you really want to, as much as you can stock. It's not like you can really store a whole bunch of gas at home for your car, but pay attention. I mean, if it's going up, if your price goes up, especially if you're in a province where they only do it once a week, if your price is going up on Friday, find out ahead of time. It's worth finding out, and if it is going up on Friday, then you want to be filling up on Thursday. Just little things to save a little bit of money. I've seen an article on how the U.S. raised the interest rates and OPEC slows production. How do they correlate? One of the things, I guess the best way to look at the correlation between oil and what's going on in the U.S. is when you're playing around with these rates, it's not like a standard thing because interest rates go up. It means that people have less money. And this is kind of the whole idea of selling off assets like the Bank of Canada, but in this case here is the Fed. They're going to start removing assets off their balance sheet in addition to raising rates. What that does is it actually will shrink the American money supply. When you shrink the American money supply, it means that the dollar is worth more. And we're already seeing this. We're seeing the American dollar going up pretty high. Now, because oil is priced in US dollars, if we raise the price of the dollars, then oil is going to move in the opposite direction. That'll actually knock oil back down. So then when you got OPEC there starting to cut the production and it causes, less oil, so that would then cause oil to go back up. So you're changing it from two different reasons. So oil's price will be affected by a whole bunch of different factors, but two of the biggest factors, one is how much the Canadian or the American dollar is worth because it's priced in the American dollar. And then the next is how much supply. So is there a surplus of oil? Is there a scarcity of oil? I mean, the least amount of oil that's available on the market, the more people are willing to pay for it, which hence, of course, drives up the prices. So that's kind of interesting. And here, Mr. Red Taco says, limit supply with high demand, prices are going to rise. Yeah, absolutely. And keep in mind, we are heading towards winter. And that means colder temperatures. That means people are going to need oil, a lot more oil and gas. I mean, when it's minus 30 outside, you're probably not going to, walk 20 minutes to the store to go pick up something or do some errand. You might have walked in the summer because, it was a nice day, beautiful walk. But in the winter, it's pretty much, you're driving everywhere. So because of that, you definitely run into a situation where you're going to be using more gas. There's no way around it. In addition to that, between the heater in your car, you're consuming a lot more. And Dividend King says, what's your thoughts on gold and silver? That's a good question. We already know that gold and silver are inflation hedges. So the relative value of gold when the dollar is going down, which is inflation, should be going up. And we haven't seen it go up. Like gold has been pretty stagnant for at least the first part of 2021. But we are starting to see a bit more movement in gold and silver now as we speak. So I still think they're both still really good store of values. And I think they're also good at inflation hedges. I don't see them going down. But, and even then, I get rid of the but. The other thing I was going to mention too is that gold, for example, is being used in circuit boards, things like that. So there is a use for it as well. So I think they're still safe bets. I think if you really wanted a 100% perfect store of value, gold, I think, will still beat Bitcoin at this point. So I would certainly say stick with your commodities right now. They're going to be good. They're also good to trade too sometimes because if you get a good amount of volatility, you can get a good amount of volatility in them depending on how the market goes. But yeah, I'm pro gold. I would say I'm pro gold. I'm pro silver as store of values. I don't. The only thing I would say about them is that if you're looking for an investment that you're going to make a huge return on, they're probably not your best choices at this point in time. But if you're just looking to store some money, and you just want to store a value, yeah, they're absolutely perfect for that. Interesting how Canada has one of the largest stockpiles, but costs too much to process. Yeah, we are actually one of the biggest energy producers in the world. We produce a lot of oil, and especially when oil is more expensive, then a lot of our oil that's locked away in things like oil sands becomes much more feasible to be actually removing the bitumen, and it's kind of an interesting thing. So we do need more refinery type situations in Canada. We should not be in a situation where we ship oil out, or we ship at least the raw elements of oil out, bitumen and things like that, to have it refined and brought back in. We're paying more money for it. To me, that's ridiculous. We shouldn't be paying more for it at all. So we need to be doing this all in-house, and that's going to bring down the price of oil for us. And it's also going to give us an export that can really make Canada a lot of money. Like, there's no reason for Canada to not be a superpower on the economic, at least economically, because we have the resources. We just need to utilize them. And that's like right now, I know the Liberal government wants to put some money into some of our rare elements, and that's a great idea. But I think they're not going far enough. I believe Polyev wants to, if he forms that next government, he's been talking about doing a lot of this oil stuff in-house. If he lives up to that, that would be fantastic. I'm pro energy. And, a lot of the reason I'm pro energy is because there's a lot of money to be made there. And I would say most of the biggest profits I've received as an investor have come out of that sector. It's never disappointed me. Even when it does, like even the beginning of this year when we had that little bit of a fall in energy, it's just like great opportunity to get some cheaper energy because I know everything's going back up after the after the primaries in November down in the States. And even now we're already starting to see it with OPEC and what they're doing. So I think energy is one of them sectors that long term it's a very safe sector. And even if you want to go super long term and talk about the end of oil, a lot of these companies, like take Fortis for example, they're investing into a lot of renewables. They're looking at adding renewables to their docket, and a lot of the big oil companies are doing that. They're looking even further into the future. So I would find that to be very, very interesting. See, I love watching your channel grow. Keep it up. I appreciate you. Thanks very much. Thank you, Mike. That was a lot, but I love it. Whatever happened to High Ride? He's still around. He's still around. I think he's been helping his parents out in Ottawa, but he's still around. He did a video last week, I think, on Tesla and the robots. So gotta love Tesla, right? TV1 Canada, are you buying Canadian banks now? I do buy. I'm holding Canadian banks. Am I adding to them? It's hard to say. It really comes down to what I've been doing is if you have on my channel, there are videos that show my full portfolio. If you take a look at that, you'll see I've got like TD, Bank of Nova Scotia, one of the smaller banks I have as well as Canadian Western Bank. Right now, I think I've got the mostly, there's a couple, actually, I think TD, I can buy some more TD, and I think a little bit more Bank of Nova Scotia because I've been playing it with the percentages because I'm trying to move things up. I don't like things that get above 5% in my portfolio. So I do have a little bit of room in the Canadian banks. I know that we've had a little bit of a rough time, and we're going to continue to have some rough time with the banking sector for the simple reason that there is going to be a lot of defaults. People who cannot survive these interest rate hikes, they're going to start falling. They're going to start losing their houses. There's going to be foreclosures on different things. So As a result, the banks, I think, are going to be struggling for a little bit. However, when you look at the dividends, their yields are really getting high now because of the price and some of the falling. So you're getting some pretty good deals out there. So I think the banks are fine. They're safe. Right now, the only bank right now that I know of in the world that's kind of in a big struggle is a Swiss bank by the name of Credit Suisse. And in their situation, they were down last month. Their stock was down about 21%, which is horrific for a bank. And there's a thing, it's called a credit default swaps. So if you guys ever watched the Big Short, you probably are familiar with the term credit swaps. What that basically means is right now their 5-year credit swap, it's an insurance that they can provide to customers that basically says, hey, your money is safe with us. Right now, they're charging a lot for the 5 years, like it's 5 times higher than normal. And that is never a good thing. So that does indicate that there's problems at Credit Suisse. But their 1 year is still reasonable. Because their 1 year is still reasonable and it isn't like as bad off as their 5 year, it means that there's no immediate danger of them defaulting as a bank. But I know when people heard about this, social media kind of exploded, and everybody was thinking, "Oh my God, Credit Suisse is in trouble. They're going to collapse." And they're not. They're probably not. They're probably going to be fine. They have time to right the ship. They have time to basically to wait out the bear market. So I think on the other side of that, as long as they don't do anything incredibly stupid, they should be absolutely fine. But yeah, definitely I do like the financial sector. Now, personally, I don't like using the big 6 banks because they nickel and dime you to death, but I definitely love investing in them. And see, I hold CGXF quarterly payer. Nice. And if you like quarterly payers, Hockey Nut, tomorrow's video is all about quarterly payers. So that's very timely. It's almost like I slipped you $1 and said, talk about quarterly payers, Hockey Nut. How far away are we from doing this? How far away are we from doing this? That's a good question. I'm not 100% sure what this is in this case, but let me know what this is. Just give me some clarification on this because I do want to answer your question. Do you own any CPG? So here's an interesting thing about CPG. They're actually a stock that I trade with. I do a little bit of not swing trading. I use them a little bit when I'm day trading. They're one of the stocks that I use. So, I think they're a fantastic stock. I do use them. Let's see here. No at TV. Swiss cheese. Yeah. I mean, that's the whole thing. I mean, the whole Credit Suisse thing, it sort of becomes a big reminder that, we are not in the best economic situation. And they're probably not going to fall, but they have stumbled. And that's enough to make people take note for sure. Not really. I prefer monthly. Okay. And you know what? That's a funny thing. Some people really do like the monthly dividends, and understandable. It's nice to have that dividend come in every month. But I find that when you're looking for total returns, sometimes the quarterly is where you want to hit. Sometimes. So, although right now everything has been a little bit kind of crazy when it comes to just the bear market. I know when I was doing my video for tomorrow, looking at some of the returns in 2022, a lot of them were in pretty dire shape, except for one of them has to do with energy. And well, you'll have to see tomorrow's video to see how that one turned out. It actually surprised even me a little bit. The oil process. So yeah, when do we think that's going to happen? Well, it depends on when we have our next election. So, I mean, technically, as long as this coalition between the Liberals and the NDP stay in place, so you're looking at 2025, and even if, let's say, Poilievre and the Conservatives won a majority in 2025, they still have to get all of this through, and then we have to, of course, construct and start building. So you're probably still looking towards the end of the decade that you're going to see any kind of infrastructure in place, because it's not something that moves really fast. Hockey Nut, have a look at GLCC. It's great as well. Pays monthly. Yes. GLCC is a nice little gold stock. So, actually, I think they were in my video last week. So, and hello, Bleak. It is great to see you. Yes, I was going to say HLCC. Honestly, my goal to swap out CGXF for HLCC when I see some profits like 6 months ago was up about 1K. Yeah, and it makes sense. I mean, and we kind of touched on this yesterday in yesterday's live stream when we were talking about movement of things. I'm one of these people that I don't care if something's down. If I see a better opportunity on something else, so if I have two stocks that are down, A and B, and A is a dog's breakfast and B actually has some potential, I'm willing to make the sideways moves, because I'm going to get more money in the end. It usually always boils down to math. So that's kind of one of them, a neat little things. Now, another little piece of news. I'm running out of news, but I do have one more little piece here. Credit cards. So businesses are now able to pass on the credit card surcharges to you. So now, using your credit card, depending on the business, some businesses, they'll phase it in eventually. Some businesses may not phase it in, but they're now allowed to phase in passing on the surcharges, which could be 1.4 all the way up to 2.4% extra per purchase you use with a credit card. Except for if any of you live in Quebec, you're safe in Quebec because it is still a big no-no in Quebec. But the rest of Canada, credit card surcharges will no longer be paid by the companies. They may still be paid by the companies if they choose not to pass the surcharges on to you. I think more than 50% of the small businesses that were surveyed said they don't plan to pass the surcharges on anytime soon, but you'll see a lot of the big retailer ones probably be the ones that do it first. When you go to Walmart, use your card, you're going to be paying a little bit extra. So it'll be interesting to see how that all works out. And the reality is, I can't see people going back to cash because they're going to have to pay a small little percentage for using their card. So I wouldn't want to go back to cash. Oh my God. I kind of remember the old days when we used cash, and it was like, how did we even use cash? It was such inconvenient. So that's kind of the way I look at cash. Oh, wow. This has been cool this week, just with the extra live streams and all of that fun stuff. So with this one here, we got about, we got a little more than 40, 45. We got a little more than 15 minutes left. So throw some questions at me. Let's just talk. We'll just chat away the breeze, because that's it for the news that I have, because we've already talked a little bit about everything. So, it's kind of cool. I guess in regards to the channel, I don't really have any changes for the channel, because I know that it probably seems like things have been changing a tiny bit, just because of the bonus streams and all the extra little stuff that we did. But everything should now be back to normal. I don't think we have anything left to celebrate. Now, last year at Christmas, I did 5 videos in 5 days. That was brutal. I don't want to do that this year, but I do want to figure out something that I can do for you guys around Christmas. So that's one of the things I'm sort of, thinking about in the background. So that will be something that will be coming up. So there will be something special on the docket for that. And I'm probably as well. Last year, I did a New Year's stream, and we looked at the top news stories of the year. I do want to do that again. So I don't know if it's going to be, I think last year I brought Ken on, and me and Ken sort of took turns going over the stories. But this year I probably might do it by myself, or I might bring some guests on. We'll have to see as we get closer to the end of the year. So, and let's see here. A Hockey Nut says, I just got my BMO cash back 5% up to the first 2K. Will there be a list eventually with all of the merchants? Well, maybe. And that's a thing. if a merchant decides not to pass on the surcharge, they could use that in their advertising and say, hey, we pay the surcharge, because that would, that might get some people to come into them. That's what I think. What do you think about businesses being able to put the credit card fee onto customers? Well, yeah, that's the whole thing. I understand it. Now, I used to work for a small business. I was I used to manage a few small retail businesses when I first, long ago. But sometimes people would come in and they would buy things where the surcharge on their transaction was actually more than the profit on the item they were buying. There'd be the occasional item like that. And so I can understand why some retailers would be kind of upset about all of the charge that they're having. I mean, I also understand that Visa and MasterCard, they need to make money somehow. So is there an easy solution? Should it be passed on to the people? Um, I will say yes and no. I would say now is the wrong time to be passing on this charge to people, not when inflation is absolutely out of control. To me, this is something when we get inflation under control, the market and the economy is doing better, then revisit it. That's what I would say. But right now, nah. Let's see, a Christmas special. Yeah, we'll do something like that. I mean, I actually did. Last year, I streamed. I did a live stream on Christmas Day. So I'm just going to put that out there. And amazingly, it is right now, I think it is still the most viewed live stream I've done to date. And it was kind of really weird. Like, I'm a big fan of Canoe EIT. Like, I love that stock. It's a good little superstar in my portfolio. Um, but I did a little story in the Christmas show, and I kind of featured EIT in it because they were doing a special distribution. So I did EIT in the Christmas show, and I kept noticing, and it's kind of funny as we moved away from Christmas, we moved into spring, but I kept getting a lot of views on the EIT Christmas stream. I'm like, why are people watching a Christmas stream in April? So then I did an EIT, a big EIT video, because I was like, well, if they really want the EIT, let's do a big video on them. I did, and to date, that video that I did is pretty much the most viewed video I've ever had. So it's probably my most successful. So, that kind of did. Now, every so often I revisit EIT, because every time I do an EIT video, people just come in droves and watch it. And it's just like, it's like, wow. So it's almost like I'm like the home of EIT on YouTube in a way. But that's kind of funny. Now Hockey Nut says, I do like the smaller group size atmosphere, more intimate. Thanks. So I try to keep it. I mean, eventually we'll get to that point, like because I was mentioning the other day, eventually we'll get to the point where there'll be so many people. It may take a long time. It's hard to say. It depends on how fast the channel grows. But right now, I can pretty much keep up with the chat. When we do get to that point that it's hard to keep up with chat, that's when things like the super chat that we now have access to will come in handy. So the super chat, basically, you donate a tiny amount. It doesn't matter how much you donate, but it highlights your text, and then all of a sudden, and that's what a lot of the bigger YouTubers do. They're like, hey, I will answer all the super chats, and I'll try to get to everybody else, but kind of throws priority in there. And that's something we'll probably look at somewhere down the line. I'm still, of course, always going to try to get to as many as possible, because you guys are important to me. Sort of like the comments, like somebody was saying, I said, I answer all my comments. And they said, well, you won't be able to eventually. And I'll be like, well, I'm still going to try. I will still do my darndest. The only time I really don't answer a comment is if it gets killed by YouTube. And usually it's because you put a link in it. Sometimes it will flag it if you put a link in it, and I have the opportunity to then release it. But it's kind of interesting. All right, so let's see here. Where were we? There shouldn't be a surcharge. It's a money garage for credit card companies. Yeah, they make a lot of money. I mean, you consider the interest off of these cards. Most of their interest is very unreal. So they can definitely, even if there were no surcharges, they can be fine. They'll be perfectly fine. So no, I would love to see it. I mean, yeah, if I had the absolute number one choice, it would be No surcharges at all coming from the credit card companies because they can afford it. Can you give us your opinion on the passive income investing approach to investing? Sure, absolutely. So there's a lot of different approaches to investing. Um, you've got your growth approach, which is usually the younger you are, normally that has a lot more appeal. Now, there's also the total approach, which is kind of the one that I use. And then there's a pure passive income. So, with the passive income approach, what you're basically looking to do is you're trying to generate that passive income every month. So, you're trying to create um, almost to the point like if you have enough money and you've invested it wisely in passive income, you can get to a point where you have a nice amount of money coming in every month as a supplement. What really is strong though about the passive income is when you normally start as a passive income investor, you look for some good higher dividend yields. You're also looking for, you want to be kind of careful. There are some high dividend yields out there, but there's stocks that you want to be watching like a hawk because I don't know if I'd trust them for very long times unattended. So you're always looking to add those bigger dividends, and you're looking to, at the same time, not be taking those dividends out, but you want to be reinvesting them. So there's a thing called DRIP, which is Dividend Reinvestment Plan. Now, Wealthsimple doesn't offer that, so you have to manually do it, but that's fine. I would rather manually reinvest. So let's say with EIT, if you bought your first, if the only thing you had was $10 or 10 shares of EIT, well, each share gives you 10 cents of a dividend because their dividend yield is up around 9%, up to 10%, depending on their price on their share. So every month, that means you're going to get $1. Well, with that $1, instead of just taking $1 and putting it in your pocket, what you would do is you would then reinvest it into EIT. And with Wealthsimple, you can do it fractionally. So you could do a $1 fraction into EIT, or you could put it into a different stock that pays dividends. But that's what we call that snowball. So the more you do that, the faster your dividends start growing. And then when you think about it with EIT, for example, where you have, let's say it's 9% annual. So if it averaged out to 9% annual as your dividend yield, well, you're actually going to get more than that because every month that $1 that goes back in, and then maybe the $1 that goes in the next month, maybe the $5 that goes in the next month, you're getting the interest on all of that as well. So you're getting dividends on dividends on dividends. Hence, it grows really fast. And you can keep track of it. And that's one of the neat things is keep track of it in a spreadsheet. And even though you're looking at it, and you might feel silly at first because you're watching it grow by pennies. Those pennies start adding up, and pennies add to pennies and more pennies. And next thing you know, you got dollars. And before long, you may have an income, because the idea with a passive income approach is that when you retire, you have, especially if it's all in your TFSA. So if, let's say, you have your TFSA stacked to the gill with some good income coming out, and let's say you're pulling out $1,000 a month when you retire. It could be very much higher depending on when you start, but let's just say, so that's $1,000 a month of income that you have as a retiree that you can utilize, that doesn't count towards your OAS. So it's not going to cause your OAS to get reduced or clawed back. So it then will increase and make your life a lot better. So that's kind of the whole general idea. Now I can do more. I mean, I think I've done I've done a lot of videos on it, but I can take a look, and maybe I need to revisit some of this stuff in a video for you guys. So, all right, I'm gonna move on. Let's see. I played video games on Christmas Day. I'm so cool. Well, as long as you played some good games on Christmas Day. I love EIT. I have 500 shares. Yeah, exactly. I think everybody mostly loves EIT. I disagree with the credit card fee being passed on to the customer. Talk about consumer gouging. Yeah, it's not the best idea at all. And it's a situation where, actually the last solution we had, credit cards not even charging that at all. That's the one I would subscribe to more than anything else. What is your strategy trading CPG? Okay, so with Crescent Point, what I do is I usually look for an entry point, and I will then buy at that point, and I'm looking for the price to go up 2 pips. So 2 pips, for example, is, let's say it's priced at $12.01. Well, if I'm looking for it to go up a few pips, like maybe I want to go 5 pips up, then I'm looking to sell it at, so if I bought it at $12.01, I'm looking to sell it at $12.06. Now, if I buy it at 12.01 and it goes down to like 11.99, I'm going to sell because I'm not going to get caught in anything going down. So I usually have a little bit of a buffer going down, a little bit of a buffer going up, and I sort of sell it through that method. And that way there, I'm sort of piling up profits, but they're just one of because you don't want to be doing, when you're day trading, you don't want to be putting all your money in one basket, because if you do, and something goes horribly wrong, you're going to have quite a recovery ahead of you. And it's never good, especially if your first trade of the day puts you in the hole and then you're fighting for the rest of the day just to break even. And you will have days like that when it comes to day trading. So definitely interesting. So let's see. No, we already did that one. I went over 10 years without paying a cent of interest on my credit card. Wow, that's fantastic, Mr. Red Taco. I am impressed, especially if you have a cash back card, and then they're paying you, which is absolutely cool. Let's see, but when you pay for a share, say $50, if your dividend is only $5 every quarter, seems like you're behind the 8 ball. Okay. Yes, one of the disadvantages to a quarterly is that you have to wait every 3 months to get that money. You're getting 3 times what that monthly person is getting. But that monthly person is, if they're reinvesting it, they're getting a tiny bit little, they're getting like, basically on that first one, they're getting 2/12 plus 11/12. So that's what they're getting extra because of, not 11/12, 2/12 plus 1, so 3/12. So they're getting 3/12 of an extra bonus on the extra dividends that get reinvested. And I just totally made that super confusing. But trust me when I say they're getting a little tiny extra little, dab of reinvestment, because you're able to reinvest a little bit faster. So that makes sense that way. But here's that thing, and this is like kind of where the quarterly comes in. When you invest the way I do, which is a total return strategy, a lot of times your total returns are going to be in some of them quarterly stocks. So, and also when you're looking at diversification, there's only so many high level, income monthly stocks. So unless you're going into a higher diversification, I usually don't recommend that, because, when things go wrong, if you're too diversified into one stock and let's say something goes absolutely horrible wrong with the company, that can really impact you heavily. Whereas if you've only got 5% of your stocks in, we'll take EIT. I don't think anything's ever going to go wrong with EIT. I love their fundamentals right now, but let's just go bizarro world and say something just totally went completely wrong, like there was a scandal or something at EIT, and it just caused them to collapse, like an epic collapse. Like let's say they went down 40%. If you're over diversified into EIT, you're going to feel that. Whereas if you've only got 5% in, yeah, it's going to hurt. And yeah, it's going to suck that one of my favorite stocks is hurting, but it's not going to cripple me. So that's kind of that whole idea that you do kind of run out. You can't sort of like, because it's easy to just sort of go and say, okay, well, let's see. I can get almost 15% with, HYLD. So I'm just going to put everything into HYLD. And everything may be great initially, but if something does bad were to happen to that Hamilton ETF, you could be in trouble, because you've got no safety net. Whereas if you take 2 companies and you have and you have a 50-50 split, then if one of the companies goes down, it only hurts half of your finances. You've still got the other half fine, and that's why the more you split, the less you get impacted by bigger things. And also sometimes having more stocks, you can sometimes have one of those stocks that does turn into one of these superstars that just explodes, and you at least get a piece of that pie too. All right. I started my journey as, last January. My portfolio brings in about 415 a month, not including RRSPs. That's not bad if you started in January. Um, so you're doing pretty good. And it sounds to me like you're being very dedicated and putting a monthly investment in, which is fantastic. Kevin O'Leary even talks about Canoe. Yeah, absolutely. And I'm a huge Kevin O'Leary fan. I definitely love that guy. And he's Canadian too, so I know some people give him some grief, but I think he's a smart guy when it comes to investing. And I guess at the start you're behind, but soon enough you're going to be getting ahead of your initial starting cost. Yeah, absolutely. That's the whole thing with investing is, you know what? You just get at it, you keep at it, you keep your nose to the grind, you just let things grow, um, and keep yourself, dedicated. Now, if you are able, the more you're able to contribute every month, if you take investing beyond just what you're doing in your Wealth Simple or what you're doing at your bank or with your broker, or with your financial advisor, if you take it beyond that, make it more of a life thing. So, for example, like, okay, well, let's budget correctly. Let's make sure that I'm not, throwing money out the window that I could be helping that snowball, build faster. Well, doing that and really utilizing your life and maybe even looking for a side hustle, like, okay, how can I make some extra money? Um, you know, like I'll give you a side hustle right now. This is an insanely good side hustle. Some people like to take photographs. So they might take some nice photographs of a garden, for example, and they will just take that photograph and they will turn it into a book cover. And then they will publish it on Amazon. The book is completely empty. It's just got a whole, like maybe 200 pages of blank pages, and they'll just call it a journal. Or maybe they'll just add some lines and call it a journal. And then they're basically selling a book with nothing in it. But it works. Some people make good money doing that. Just so it's one of those things, just think outside the box. And there's lots of opportunity out there to do all kinds of fantastic things. What do you think about penny stocks? Okay. So penny stocks are interesting. They're interesting because they're very, very volatile. Some people love penny stocks because there's always that potential that a penny stock could absolutely explode. If a penny stock explodes, you can make a lot of money. But the downside is a penny stock can also implode just as fast. So you don't have that stability there. You don't have a safety net. So for that very reason, like when it comes to day trading, I can make more money on penny stocks than I can on regular stocks, but I won't touch them because it's way too risky. Also, when it comes to day trading, penny stocks don't have the volume. So you can get stuck. Like I may get into a penny stock and maybe it goes where I can make a huge profit. But if I can't sell it because I don't have the volume to sell it, I'm not going to get that profit. And next thing you know, it may start falling and I could end up losing, even though I was trying to get out when I, would have made a big, I would have made my days goals for the day. So that's just one of those things. So what I normally would say with a penny stock is if you have a high conviction, like if it's a company and they've got a penny stock, because all companies normally start pretty small. Well, not all. I mean, some of them they grow really big before they NCO, but a lot of these smaller companies are startups, and some of them are going to succeed. If you see one and you have a high conviction in it and you want to put some money in, treat that almost like gambling, like saying, okay, well, I got an extra $100 I don't mind to lose. I'll invest in that penny stock. And if it does turn out to become a great stock and it does explode, you'll make some money. You'll be happy. But, that way there you have that realization going into a penny stock that it may not. And here's another thing. YouTubers. If a YouTuber promotes a penny stock, run in the opposite direction. Absolutely run. And I'll tell you why, because half the time is if you look at any of these YouTubers who are promoting some kind of crazy penny stock, half the time they're doing either a pump and dump, which is where they're just trying to get all of their viewers to buy, stock A, so that they can, because they've already bought stock A and they're getting ready to sell it once their viewers buy it. Or sometimes it's just a sponsored video. Sometimes a YouTuber will get a sponsor for a stock that is, maybe a penny stock, and it may be a stock they would not normally promote. But because they're getting paid to do it, they some of them will, not all. I'm never going to promote anything that I don't believe in personally, but there are a lot, and it's not so much in Canada. I want to point that out. I think most of the Canadian financial YouTubers are A-okay. I see a lot of this, though, with the American market. When you go into American financial YouTubers in the US, there's a lot of different things. I know in crypto as well, they had a huge issue with a lot of pump and dumping. So you want to be a little bit careful about that. So, $100 a paycheck, not bad if you can keep that up. And I don't know how old you are, Hockey Nut, but the younger you are, and if you're doing this and you can do it all the way to retirement, you're going to probably be a millionaire, dude. So that's a nice little idea. And AC.62 says penny stocks are like going to the casino. They are 100% like going to the casino. I could not have said that better. And Mr. Red Taco, if a Kardashian promotes it, it's not good. Who knew? Yes, the Kardashian was probably the yeah. I would never buy something a Kardashian promotes. Sure, Ryan with cans. Yeah, I mean, Ryan promoted cans. I didn't get too deep into cans, so I don't know if it was a good buy or not, but it's one of those ones that, even Ryan, somebody who I respect, if he were to promote cans, if I'm going to get deep into them, I'm going to do my own deep dive on it. It's that thing, right? We always say, do your own due diligence. And that's what you want to do, because it's your money. It's not, it's not Ryan's money. It's not my money. So if I'm saying, oh my God, there's the best opportunity ever, you need to be out there investing in Banana Co. Well, you better be, don't invest in Banana Co. Go learn about Banana Co. Deep dive. There's a lot of great sites on it. And sometimes, even if somebody were to reach out to me, because I was like, if I did a deep dive on a company and somebody's like, oh my God, that does sound really good, I'm not sure what I should do to find out more information. I'll help you out. I'll point you in the right direction. If that's something that, you're looking to do, if you're looking to invest in something like that, because my goal here is just to provide, kind of like, I look at it as being that stepping stone. Like, I may point you in the direction of a company, but what I want you to do is I don't want you to run and buy it, because, even if I say, I'm kind of thinking I'm going to add this to my portfolio, that doesn't mean you should add it to your portfolio. What that means is, if you're thinking, oh my God, that looks great, well, then go research it. Go take a look at it. You want to make sure that it is right for you, because keep in mind, we come from different places. So my level of risk is probably different than your level of risk. Like what I can afford to lose without batting an eye at, maybe you can't. We don't know. Or maybe what you can afford to lose would absolutely terrify me. It could go either way. But it's one of those things where you have to sort of look at it that way, that you sort of have to go, okay, this is my money. I'm going to do my research. I'm going to make sure I'm going to talk to the right people if I need to. If you really need help, that's what a financial advisor, of course, is for. And that's why you want to be a little bit careful. Like, a lot of people on YouTube, they sound knowledgeable. They sound like they know what they're doing. And a lot of them have, a lot of them know stuff, but do they know what you need them to know? And are you willing to trust that you're listening to the right person? Because it's kind of like, look at it this way. If you have a problem, let's say physically you had a problem, you're not going to go to your neighbor and say, and then your neighbor's like, oh, I think that's a gallstone. I've seen that before. It's a gallstone. Well, no, you're going to go to a doctor, because a doctor will be able to tell you, okay, yeah, that is a gallstone, or no, this is a little more serious than a gallstone. And it's the same idea when it comes to investing, because your money is important. It takes you a long time to make money. I mean, unless one of you guys are like absolutely, somebody just gave you bags of money, or, a Brinks truck broke down in your yard, nobody ever came to collect it. The money's not coming pretty fast. So, do what you need to do to make sure you're doing the right investments, to make sure that you're spending your money wisely. Anyway, I went off on a tiny bit of a rant there. What is your background in investing? Well, my background, I've read a lot of books. I've watched a lot of videos, and I'm also insanely smart. Those would be my three number one categories. But the thing is, I'm also an educator. I've been an educator for a long time. I'm very good with information. Um, that's pretty much where I come from. Now, I have read most of Canadian Securities course. Uh, so I've been learning. I'm always learning, and I'm still learning. But I'm really good at learning. I'm that person that, yeah, if you were ever shipwrecked on an island, you probably want me there because I'll figure out things pretty fast, And if anybody's going to get us off the island, it's going to be me. I'll get you off the island instead of making all kinds of coconut things like the professor on Gilligan's Island. All right, I get that. But when is a sponsor video? Watch out, guys. Yeah, if it's a sponsor video, you gotta watch out, and that's why by YouTube, the YouTube rules is that if the video is sponsored, you have to make it clear that it's sponsored. It's one of those things. It's kind of like because if I was doing a sponsored video and I didn't tell you guys it was sponsored, that would be, that would be really, really wrong. Can't agree more about researching and learning. Yeah, research, learn, get yourself in there. It doesn't hurt. And that's a thing too. And sometimes I've even had people, and I know they're doing this because of research, and they're like, Candace, just do a deep dive on this. And I'm cool with that because I'll do the deep dive. I'll give you that brush of what I see so far, but then you have to take it from there, and you got to go in and you got to dig a bit deeper. You got to make sure that it is something that is right for your portfolio. So anyway, that's kind of one of the things, or how to evaluate financials. Yeah, exactly. And that's one of those things. And those are skills that, they come along, and you're going to make mistakes. You're going to, even now, I mean, every so often I'll be looking at some numbers, and I might miss something small. Like, for example, there was a stock split and that number isn't right because of that stupid stock split. That will sometimes happen. Doesn't happen as much to me now as it did, let's say 6 months ago or a year ago. But I just look at it like I'm always learning, and everything I learn is only going to make what I'm doing and what I'm doing to help you guys learn even more better, even more rewarding. And that to me is just absolutely fantastic. Candace now changing to crypto. Yeah, it's actually funny. Currently, the only crypto I have right now is I've got a few little sats on from my Shake Pay because, I did sell my Bitcoin. And I was very open about that. But I sold it because I'm using it. With day trading. So that's just a choice that I had made because it suits what I'm doing. All right. And what is this? What is your take to Polkadot change? And here's one of these things. Because I've been away from crypto mostly, I did not even know there was Polkadot change. So I don't have an opinion yet, but now I kind of want to find out if there was a Polkadot change. I need to know because Polkadot was one of my favorite cryptos, only because Polkadot reminds me a lot of TCP/IP back in the days when the internet started, because it was a way to communicate between different devices and different computers. It made the modern internet pretty much possible. So Polkadot, kind of did that with crypto, but it just never caught on the way it should have really. But I definitely want to check that out. Thanks for the stream, Candace. Going to put on stakes. Awesome. And a new improvement. I'm going to check that out, Siso. I'm very interested in checking that out. Maybe we'll talk about that next week. But anyway, we've already gone 15 minutes past what we were supposed to. So I'm going to wrap things up right now. I just want to thank you guys all for being here. This was a fantastic stream as usual. Enjoy the rest of your day. Maybe everybody should enjoy some steaks like Hockey Nut, unless of course you're vegetarian, in which case you can enjoy some fried veggies on the barbecue, something like that. Anyway, it has been fantastic. I'll see you guys again next week. And of course, we've got the videos during the week. So take care, and we'll talk to you all again very soon.